What's happening, guys? We have another Sunday video coming at you, this time for June 5th and the week ahead. We're flying through the months here. Hopefully everybody is having a good start to the summer so far. It's definitely probably my weakest style market in the sense that I personally have trouble just chasing gaps and letting them work. And that's what's working. You know, you've got these big gap ups, they pull back a little bit, and then they just steady grind all day. So for me, what's been working is patience. And, you know, usually I am aggressive off the open and I get really prepared for 9:45, 10 a.m. plus type setups. But, you know, most recently, there's been some good stuff, PLTR and CVNA and AI and all these different names right off the open. But the key is you have to remember that, you know, it's a trade. And if you're trying to force or think big picture, then you might as well just wait until noon, 2 p.m., you know, thinking of letting the trade work. You know, one of the difficulties I feel like a lot of people have is they get right on the right side of the move right away. It proves them right, and then they try to let that trade work. But we're in a market where things are getting absorbed and more and more and more and more, and then it just starts to break out. And, you know, you sit there, you had a huge score off the open, and you just slowly watch it go away. And you either move on, or you turn it into a loss, or you try to fight it, or you end up wasting your day. So one thing that I've been particularly good at recently over the last couple of weeks is just being patient, you know, and usually I come right off the open and I've got 2-3 main watches that I really want to, you know, get involved in. And now it's just like, okay, I'll wait. And, you know, that's good for some, and for others, you know, they need the action. And I think that in the past, when I've needed the action, that's when I start to go backwards. So I'd rather, you know, if I don't outperform right now, that's fine. You know, it's me versus me, you versus you, right? And if you're comparing to the other person that's performing in this market because they've got this huge portfolio that they've been swinging and everything's working, then that's great. But when it starts to get choppier and things start to go down and you're performing because you've got all these, you know, opportunities due to the volatility, well, they're not performing. How do you think they feel? So don't worry about others. Just worry about what you're best at. And that's really, I've been very focused on just stay in my lane, do what I do, and don't try to be a hero. And the biggest change on small caps that I've said many, many times is I'm just not sizing them. You know, it's just there's certain situations where, yes, if it's coming off a hot run and there's clear exhaustion, clear selling, clear opportunities, absolutely. You know, I'll scale into those types of things. But 2, 3, 5 million share floats, you know, I'm max sizing probably 1/5 what I used to trade, right? And I think that's helped me. There's been a couple swipe situations that could be a little hairy if, you know, I was in size. And so, you know, this week we had MMV, we had UCAR, and, you know, the reads were good. For those of you guys that were in the chat, you know, kind of identified the traps, identified the key levels. But, you know, if you have too much size, it doesn't matter how good your read is. If you get caught on the wrong side, I mean, that's it. You know, it almost goes into a circuit one way, back down the other way. I mean, it's not easy tape for size, you know, and you need to give yourself that buffer to be completely wrong, because most of the time you probably end up being right. But it's that one that you're oversized, maybe too aggressive, that just sort of takes away all the rest. So anyway, I asked for a few questions this week, and I have a few topics that I will go over as far as the trade reviews. My goal on those is just to kind of keep driving home the points in your brain, different price levels, different price action, but sort of similar concepts. Basically what we talked about last week or the weeks prior and how it applied to this week. And I think that seeing that over and over, you know, it's good to review situations that worked, and some might call it hindsight, because like it's always easy to go back, right? It's always easy to go back and look at certain situations or certain setups that would have worked perfectly. But my goal here is to showcase sort of the real-time thought process, the real-time discussions when we go over these things and how it related to the trades last week. So rather than more of a hindsight, let's look at the warning signs that were given in the room, where we go hands off, where the edge forms, and the difference between getting chopped up and being patient and actually making a good trade on these things. And that's really the difference between those that are performing right now and those that are trying to, well, this used to work. Why isn't it working now? I'm going to keep trying, keep trying, keep trying. And at some point, you just have to own it and be like, hey, you know what? This isn't working. I need to just rezone in on what the market is rewarding right now, or stop trading. And I think a lot of people have a hard time with that. So I'll get into those questions in a second. T-shirts, Bull Bear on YouTube, Jason3818 on YouTube, Mr. Naj Afik, Najafij on Twitter. Always great. I would add in on that guy. Always great bullet points. Every Sunday he watches and he writes all his bullet points from his key takeaways. That's awesome. I mean, that is putting in the work, and that shows. And I hope that obviously you're watching, but I hope that you have a lot of success with that, because that's the exact same process that you should be doing. That's what I did, learning and taking notes from all different traders, younger, older, it doesn't matter. Whatever they're strong, whatever they're good at and you're weak at, what can you pull? What can you pull to make yourself better? And then Joe Krupinski, and that number 5, that was on Twitter as well. So as always, retweet, like my scan on Twitter, or leave a comment in the YouTube section, like the video, and you will be entered to win t-shirts, Icon Meals, scans, IU, you name it. All right, questions from Twitter. Zico. Nate, a couple of your charts don't stop out where novice traders ordinarily will. Sometimes you add more into the move and you wait out the push. Can you speak to times where you take a loss and reassess or hold your conviction? I understand your size has restraints. So for example, a loss that I took this week was on CVNA. And CVNA was a fantastic opportunity off the open, pulls back, and then it started to rally back. It actually went down to a circuit halt. So, you start to kind of think, all right, I'm going to watch pops for that short. And then it ramped back up and it came right into VWAP level. And I actually said, I was like, before I put on any size, before I even scale into the trade, I want to see VWAP fail. I want to see it retest and fail and break down. And instead, I put on, I added more. So I had a first entry, and then I added more, anticipating VWAP to fail. And it didn't. So because I had added in, right, it was no longer a starter, and I had added into the trade, and it just started to go and go and go. And typically, if it's a small size, yeah, I will let them go because it's not really a big deal. However, since I had added, I said, you know what, I'm not doing this. So at that point, I moved on. And as you saw, if you are in the room, I stopped out. I said, I'm out. I'll wait for, this thing to blow off or whatever. And that was a good stop. It was just before, I think, 15. And I think I was probably short 1420s or so. Then I went to almost 16 something, 1650s, 1670s. I don't even remember. But it's set up. And because I went ahead and took that proper loss because I had scaled beyond just a starter, I was able to clearly see the trade setting up, and then we got that nice fade. And I don't remember if it was Wednesday or Thursday, but it was just a flush, nice flush right into the close. So, the difference is when I start into something, typically what I say, especially in the room, is, I'm starting in because sometimes, as you know, it might just stuff and fail, right? And it's nice to have a little piece on so you can scale in, right? And you maybe have a little bit more padding earlier. But the downside is if you're wrong and it continues higher, then, now you're dealing with a starter and you're wasting money that you didn't need to. Granted, it's small, but still, the point is that, you know, if you're not good at that and you know that typically turns into a bad trade, then just avoid it. Wait for failed follow through to set up. But yes, most of the time I'm saying I want to see it swipe up and test these certain levels. I'm starting in, but I always look at the channel. Where is it having trouble with? Where is it having support? And I want to build in risk so that I can swipe through and sit back. Because you saw this week on AI and CVNA, I mean, MMV even, lots of these trades, UCAR, there's like this mean reversion setup where basically it kind of ramps up, consolidates, starts to grind, chop, 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 and then it rips. And then typically it comes back to where that setup started, where that trap started, right? So if you are not anticipating it to clear out more, then you probably stop out. It's best, in my opinion, to only either be a starter or just wait fully for that to unwind. Because that way you have shorts that kind of covered, you have longs buying the breakout, and now it's top heavy. And now you have the edge of sellers on your side. Before you don't, right? Before you don't, you're competing with other people that are trying to cover at the same time. So, you know, and by me getting into a starter, it allows me to get a better read on situations. I start to zone in on that particular trade. And I'm sure you guys are the same, where, you know, you might be watching certain names, but what's the difference between the way in which you watch them when you're not in versus the way that you watch them when you are in? And that's the concept of having a starter on there. Just because you get hyper focused on the action, you know the trade's close, you get a better read on it, and then that's where I end up getting some of the reads that I do. Just because I just dabble in there until I get better confirmation. And then one thing too to remember on small caps, if there is only a handful, less than a handful, one or two main runners, it's probably going to be a crowded mess. However, you know, fundamentally, technically, it might be setting up for a textbook short. And so the risk is that there's only one or two momentum trades today, and it's probably going to be crowded, but the setup's still there. So I might start in so that if it does stuff and slam, I've got that padding. And then I can start to be a little bit more aggressive than maybe somebody else that was waiting for it to fail and is just starting in right now. Now I'm already on round 2 or round 3 of scale, and I'm already, you know, getting rewarded for that because I took the risk of being wrong on that starter and gave myself a little padding and room to work with. Next up, I hear you talking about liquidity trap. Could you please explain what that is and how to spot it? So what I would recommend is just do Investors Underground liquidity trap. There's like 3 or 4 videos on there. And I think there's one on Facebook that Judah always posts in the lounge. But the concept is basically when, you know, you've got this major candle, 70 million, 80 million, 120 million, you know, whatever it may be. Next day goes to about 10% of that. Following day is probably 10% of that volume. And then it oddly starts to hold trend, retakes prior resistance points, and carries on. But that doesn't mean that it's just going to go nuts, because it could just have that exit where like the last hurrah, the rest of the covers come in and then it fades off. Or it could do enough to trap round 2 like ETNB, where it ramps up, sits back, gets a whole new round of shorts, and then fries both the early shorts from the liquidity trap day and the new shorts. And then we have that blowout move like we had on ETNB. Next question. Can you explain why the high days keep getting taken out on, and then the stocks fade like UCAR, Apple, and some of the other ones? Is an algo doing this? Is it naturally happening? Kind of confused by this since they take the stops out and reverse it. And, you know, what you said is exactly right. I mean, they just take the stops out and reverse it. So know that, right? So how do you, and that's kind of what I was referring to. I'm taking trades, I'm trading less size, I'm being less aggressive. And if I start in, I want to see that clear out move. I'm building that into my risk. And most people don't. Most people say, all right, I'm going to risk to this level. Yeah, well, everybody's risking to that level. So why wouldn't they go back up to that level and do just enough to make you doubt everything, right? Because risk is elevated because you don't know. You don't know. Is it going to go to the next circuit? Is it going to go squeeze? Is this the flavor of the day and it's just going to go nuts? You don't know. And therefore your risk, the fear of the unknown is high. So as they take out that level, you get elevated as far as fear factor, and you're like, I'm out, right? But if you position yourself to let that happen and assume it's going to happen, more often than not, you see it happen all the time. And there was a quote, it's like the moment where doubters become believers, right? And I think that's like, for example, if you were short UCAR, at some point it starts to go, and you're still in denial. You're doubting that it's gonna has any juice left, right? You think it's gonna fail. You think that it's gonna unwind, and then it starts to go, and then it doesn't fail. Then it starts to go a little more, doesn't fail. Goes a little more, and now you're saying, oh man, this thing could go, and if it goes just a little bit more, I'm gonna go ahead and take it off. And you go through this whole mental, back and forth in your head, like, should I stay? Should I go? Should I stay? Should I go? And then at that point, that swipe comes, you're like, oh, I gotta go. And you bail. Everybody's doing the same thing. Because now you were a doubter, now you're a believer. And at that moment, that's where that liquidity point is. And that's why a lot of times you see it stuff and start to fade off. And it always feels like it's always the one that you're, sized up on, most confident, because the reason for that is because it was the easiest one. It was the one that was behaving, and everybody that did the same thing was getting rewarded until they weren't. And then they go through this process and this next process and this next process. And it's just this pattern of, denial, like, oh crap. And they know, and they do just enough to turn you into a believer. Next was a basically on MMV, which I'll go over. Can you explain why this is happening? It would be helpful. And basically like a clear out algo. Somebody had posted new double clear out algo liquidity hunting longs and shorts. Most manipulated and scammy action I have ever seen. And so basically and I'm going to go over this, but it was MMV on Friday. And so this is really about drawing those levels. And when you draw those levels, if you are positioned in and you're in between, you should expect chop, number one. Number two, you should allow yourself room for the clear out so that you're not emotionally involved. If you are, size down. And when the move happens, MMV was not easy, right? The move happened, it slams down. The only way that you get a benefit there is if you were there with, a cover ready to go, because it flushed, went right to the next key level that I had given, and then went right the other way. Because what did it do? It convinced everybody that was shorting all morning that they were right. Everybody that did not short all morning that was behaving slams in. They catch it, and then bam. Because nobody's covering. Everybody wants to get the trade, and it finally cracks. They know that. They see everybody hammer in, swipe it, make them pay. Everybody panics, covers, liquidity exit. They're done. They moved on. And, that is a result of crowd. And that's why literally every single Sunday you see me talk about this. Hands off, be patient, let everybody else pay for the information. If I'm in there ahead, I'm just small until something like that happens. And as you saw on MMV, I said, at this point, I think it's done because that finally happened, slammed, squeezed everybody out. And at that point, that's when I start to get interested, not before. Before, yeah, sure, I had some. And, it slammed down, swipes up. I scaled in, I stopped on some just because I wanted to be safe, just in case. I had sized up at like 4. And I was like, maybe this is a bad idea. So I covered some. And then it flushed back down. And, even though it was 40, 50, 60 cents less, I'm more confident and comfortable scaling in there than I was at the top. Because at the top, you don't know, is it going into a circuit? You don't know if it's going to continue to go. But at least on the bottom, you know that there's a lot of other traders that are now stuck on the wrong side. And that's what you want. All right, let's go ahead and move forward, and I will get right into scan for the week ahead, as well as a little bit of trade review. All right, guys. So for the second part of scan, as always, I'm not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. I wanted to go through a few just kind of concepts from last week. AI, you guys saw the trade. Wanted to go over the sort of the why and how I found those levels. Again, this is a recap after the fact, but this was actually real-time information, real-time discussion, real-time entries. And I want to go through the why so that you can sort of anticipate or at least prepare for it in a real-time environment as well. So AI, for example, the trade that you saw me take, I had posted, basically shorted into the 37 area, covered some, anticipating that 35 may hold, rescaled in, and then covered the rest into the flush, assuming that VWAP was going to hold. That said, how did I come up with those numbers? So we had obviously the earnings report. We had a huge move. Obviously the prior days. And you can kind of see that there was a lot of congestion in this area as well. We had this nice little trap, squeeze out, pulls back. We had the earnings, swipes up, pulls back. And then we start to come into this area right over here. Flushes down, consolidates around 35, ramps up 35.80s, rejects, it fades off, comes back up to 35, fades off. So we know 35 is sort of an area of congestion and 35.80s is an area of congestion. So how does that relate to the trade and how can we benefit from that? And so what I had written in the room and what we had talked about is I'd like to see it kind of push up towards 35. So for example, if you did start in, you'd want to be in a situation where you can let it blow through these two levels. Otherwise, if you're not okay with that, then just wait. Wait for it to speed up. Maybe you miss it. Maybe it stuffs at 35 and it flushes to 34.50 and you would have had a nice starter entry and you would be able to scale, but you missed it because you didn't want to bother with it. I didn't want to bother with it. It was a dangerous, wild name. So I wanted to see it blow off through those levels first, exhaust out, prove to me that, there was an emotional kind of shove and then the edge comes back. So as you guys saw, I didn't start to participate until 37 or so, flush down, and then at that point I want to assume that it's going to have a little bit of consolidation and potentially even hold at this 35 level. And so I want to go ahead and proactively cover until it proves again and let it exhaust out through the 35.80s level, and then as it started to fade off from there, obviously the trade would have continued to work. I was gone after that point. But point is draw those lines and wait. It's no different than MMV and UCAR and all these other names. So, another example of sort of letting this almost like mean reversion kind of settle down is you've got something like CVNA where you just have to start to notice where it's having these kind of congestion points, where the support is coming in. You can see that it holds 1570s, holds 1570s. So the edge becomes when it starts to squeeze up over 1570s and then exhaust out. A lot of times it will come back to that level. So anytime you identify a particular channel, you don't want to anticipate that it's going to break. You want to let it do its thing. And as it starts to squeeze up over the channel level, that's when, in my opinion, edge comes, because it'll come back a lot of times and retest. Sometimes it may hold 1570s and then start to go, next level. And other times it will stay heavy and you can actually scale into the trade. So same sort of concept, just kind of letting it get through this channel and then start to prove that it wants to fail to follow through. And, we had UCAR this week, which was another nutty one. And the sooner you can identify a particular channel, the better. We identified this one at 475. You guys saw I had posted that as well, where we had a great setup over here and nice failed follow through, and we'll call it 550s. But 475 kept on soaking, and it was probably 3 or 4 tests, where it flushed down and it got saved, flushed down, got saved, flushed down, under, retest, got saved, another one, and then another one right over here before it ultimately ramped up, rejected, right? It rejected off that key level. So 550s was the area that we were using all morning as sort of that exhaustion spot. But if you get too aggressive, if I can find the key, shift, there we go. If you get too aggressive on the front side, what's going to happen? You're going to get stuck. So you can see here, this is a stuff move. We talk about this. When a stuff move gets absorbed, it is voided. And when the next stuff move gets absorbed, it is voided. So what did you have? You had a stuff move, sits back, absorbed. Absorbed, absorb, absorb, absorb. You can see all these wicks. This is a continual conversation on Sunday Video, literally every single week, about these wicks. So you had to ignore 1, 2, 3, 4, 5, 6, almost 7 candles you ignored if you ended up getting, blown out on a trade like this. And we're not in a market to sit there and just kind of see what it does. So you had 7 minutes of continual warning signs before the trade actually went. And that's why you saw me warning like crazy, like, hey, if you're still there, this is when things open up. And, obviously it started to open up. And at that point, you just have to wait. You have to wait for things to calm down before you have any edge. And you can see, this thing does the same thing all the time. You can see how it had an issue over here, issue right over here. You can use those, but as it starts to firm up and have a nice base over VWAP, you have to be super, super cautious. And again, over here on UCAR, on Friday, in hindsight, yeah, we can go back and say, this was an easy, short, obvious short, but it's not always the case. And this was very difficult. What you could see is, I think it was 1170s I had pointed out, but 1170s was the congestion, right? So there was a lot of congestion in this area. So you have to respect that, especially on still the front side of the move early in the morning. And how easy was the trade, right? So if you reacted to the move and it went straight down, there was no headaches. It went straight down. So once it starts to base, you have to be hands off, because guess what? Everybody that made the same trade as you banked, right? And so now it's about recognizing the second part, the second phase of the move. And well, it should have cracked the 1170s. It didn't. Oh, it did. Came right back. 1170s. Should have cracked, didn't. Should have cracked, didn't. Where do you think it's going to go? And so this is that sort of denial that I was talking about. It starts to go. Okay, phew. It's coming right back. Oh, it held 1170s. Starts to go. Confirms. You've got this dip and rip candle right here. You guys can see. Dip and rip. And then from that point forward, it's just this slow kind of, oh, it's holding. Uh-oh, 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 panic. And then when you take a step back a little bit, you see that this was a perfect looking left opportunity, cleared out right into that prior seller, huge exit for them, and that was it. Now, is this a good entry? Sure, it would have been, but what if it went into a circuit halt? So for me, I like to see it kind of reject. And this is basically the opposite of a dip and rip, right? Kind of rips and sits back. And so at that point, I start to get interested and, clean unwind in a great trade thesis discussion in the room on Friday. So that was a little bit of that one. MMV was very, very similar, right? So once again, I mean, this stuff is not rocket science, but yet I'm not saying this is easy. It's easy to draw these lines and remind yourself of these situations, but it's hard because everybody wants to nail it and they see what they want to see. And, that's really the big issue. So you can kind of see all these dip and rip spots. The levels that I gave in the morning was 320s and I think 290s, if I remember correctly. And those were very early on. And as it started to go, I think 330 was the other one. And I basically said, I am not interested in any size until we have 330 ramp and stuff, right? And so most people just slam into a pullback, right? So it's going, it slams. So everybody's like, I don't want to miss it. I'm going to slam in. Well, what happens if they soak that? Then where are you? So I want to see a slam, another fail, come back and stuff and fail to follow through, right? I want it to fail on the 330s. I don't want to see a 330 crack and think that's confirmation. I want to see it go 320s, come back and hit a brick wall at 330s, and then start to stay heavy 328, 325, 320s, and so on and so forth. And so what I was telling people in IU was, think about if you were, aggressive in this area and you get chopped up. Sure, you nailed it. Great. But were you any better off than had you just waited until 330? Right? Probably not. Right? Because you probably got a realized loss and now a nice unrealized gain, but you'd be in the same spot had you just waited until 330. So that's really the key concept here of patience and sort of the why. And then we also had UTRS, which you guys saw. And again, this should start to show you. I've now showed you on a $25 or $30 stock. I've showed you on a $20 stock. I've showed you on a $3 stock. I've showed you on a 50 cent or 40 cent type stock. And so for me, this was a great, kind of steady move up. And fortunately, I didn't really see it earlier, so I didn't really have a chance to, get involved. I probably, if I was watching it, maybe maybe around this 35 level, but then the fact that it's holding view up would probably turn me away. But anyway, we had this nice slam, which, people react to, and then they get popped. So I let it kind of exhaust out, and you can kind of see that, basically everybody that slammed in here probably got popped. And so then I started to get interested in the trade. And, you saw I started in, and basically I was looking for VWAP to get heavy, and it didn't. So, I wasn't full size or anything yet, and I was trying to start into the position, get a good average, and let it work. So I had mentioned at 38, there's obvious that it's firming up. There's consolidation here. You should assume that VWAP's going to hold. And I had mentioned if you've sized in, if you're oversized, it's probably a good time to size down. And I said that after this right here, because you had this flush on VWAP. So that's typical. Assume it's going to hold. Then it flushes again. So great. Failed follow through. Nope. Dip and rip. So there's that small, just like UCAR, you had 1, 2, 3, 4, 5, 6, 7 minutes, right? Before, did you make the right decision or not? And so here you've got this dip and rip and about 7 minutes again before it goes. So I held my position just because I wasn't really scaled in yet. And then, as I had said, looking left, I wanted to see a 45 clear out. And at which point we see a 45 clear out, then I'm interested. So let them do their thing, just like AI, just like CVNA, just like MMV. And then let it flush, right? If you hammer into this and it goes back up to 47, 48, are you nervous? Or are you covering? Probably. So you don't need to participate in this. Let it retest. And then as it rejects, now you have more sellers fighting for their exits because the breakout didn't hold, right? You want more shorts to cover. You want more shorts to get long. You want longs to buy for the breakout and then ultimately fail. And then you're no longer competing against other sellers, short sellers. You're competing against actual sellers. And that's the difference. So I think that was what I wanted to talk about. And then the only other thing is just kind of seeing these big picture breakouts, which Chris Kulamagi is amazing at. And I have a lot of respect for him just because, the guy takes off 6 or 8 months and then literally shows up the day before the market just goes bananas. And that's not the first time. He did that with GME the second time and GME the first time. So just his ability to be there when it counts is absolutely amazing. And, I agree with, one of the things he says a lot of times is, we know all these things are junk, right? Smart money taking the opposite side. They know that this is complete BS, right? But if it holds, what's going to happen? All that smart money is on the wrong side. And, the dumb money becomes smart money because they're believing in the story, the theme, the sector, and that's really all that matters right now. So likewise with this NNOX, I had pointed out this should have died. And you can see all these wicks that we talk about. Huge setup here. And same deal. We had the same kind of situation with AI multiple times. And then over here, should have died, should have died, should have died, and it just keeps on going. CVNA obviously had the same kind of situation. IONQ. I mean, it's very, very, repetitive over and over and over again. But just kind of seeing these situations and these setups, I feel like a lot of people that have that bearish view miss out on these opportunities because, yes, it's a POS company, and sure, somebody did a hit piece on it, and you can make everything sound bad, right? But it's all about supply and demand. And if there's too much short supply and there's a lot of demand of buyers, then what do you think is going to happen? And so that's just what's been happening. They've been going back for all these, high short interest names, CVNA and all that kind of stuff. And we're into this resistance over here, and there's a good chance that it might fail, but who knows? If SPY keeps on going to 450, then, buckle up. So let's get into the scan for the week ahead. Hopefully all those made sense. I really, my goal is to kind of showcase this stuff. But again, this is all real-time stuff that we talk about at IU. It's not after the fact, you could have done this, you should have done that. It's real time, because at the end of the day, you got to figure this stuff out on the fly. You got to know when to be wrong. You got to know when to be right. You got to know when to press. You got to know when to stay away. And being able to do that in a real-time environment is, a difficult task. So main watches for the week ahead. Main watches are typically what I feel like I'd likely trade more than anything else. They're the ones that are probably the most liquid, and I feel like have the biggest opportunities. I've been having a lot of success focusing on the hot stocks of the day after, just because everybody is still so crowded on those names, meaning, the ATM place, they go for it and it's still holding trend 10, 11, noon. And then they're fighting, oh, it has an ATM, they need to dilute. Okay. Well, that's fine, but they're not right now. So you're going to probably get squeezed out into the close. So as that happens, the next day people forget about it because they're exhausted. So I've been going back to a lot of those names a lot. But FRZA, they had a tweet at the bell, 4:01 p.m. And, it was basically, it was the same price as close. So it's kind of like, what's your risk? A dime. And just in case it went, I had no expectations that it was going to go nuts. Otherwise I wouldn't have sold any. But, as with anything, if it ramps up fast, I'm obviously going to sell some and then ride the rest. And so, this thing went, and you can see that this was sort of that trapping area. So during the mornings, we talk about the sub VWAP trap, right? Where they let shorts win for a little bit, soak it up, let shorts win, soak it up. And then, this was sort of that dip and rip candle. So I would imagine that most shorts actually got caught right here on this candle, over this 5 to 10 minute period. And then it looked like it was going to crack VWAP, and then boom, straight up. So I think from that point forward, they're actually stuck on the short side, and then just, too much happened after hours and they got squeezed out. So at any rate, this one kind of reminds me of almost like an FDA catalyst, right? You've got this retail run up, and then when they get approval, it sells off. So in my opinion, if they had a PR this week, keep that in mind. There's a good chance that it may have already been factored in, and we could have a nice gap and fade, throughout the day. Next up would be NET. NET is something that I'm definitely interested in. We're coming up on some major resistance. This looks like about $72, 72.41 was the high back on February 15th. So this is something that I would be watching with the market overall. This has a history of these crazy moves, and you don't have to find the top. Once it starts to pull back, it usually does multi-day down, legs. So keep that in mind. You don't have to be trying to find where it peaks out. Let it peak out and then join that trend. And then the last two, which I would consider, they're like daily drivers. Daily drivers for me basically means that every day you can kind of come back to it and there's been a good opportunity. So PLTR and CVNA, I've been having good trades right off the open, and then they start to go into that holding pattern. And the sooner you can realize that they're in some sort of holding pattern, the better, because it's so easy to go back, and think you're going to get just as good of a trade as this move off the open, right? And then it goes back up and you start to size in and you're like, nah, I had a good read on it. I'm going to make money again. And then all of a sudden it does just enough to squeeze you out. Recognize when there's volatility, when there's edge, and when it starts to consolidate and your edge goes down. And then I would say the next and final main watch is TIO. This one's been a fantastic one where I continually have been fading any good strength. So just be cautious jumping in front of it. I feel like, a lot of times people get a little too aggressive, then it holds. It does just enough to push people out and then fades back down. So I'd be watching as long as it does not break out over 320s. And I apologize, I'm competing with my kids in the background. Higher the better on TIO, and then failed follow through. And I still do think and have sort of an opinion that we're looking at maybe low 2s to 1s in the short term. I really could see this completely unwinding. It feels like a very fabricated story, stock kind of. I don't want to call it a fraud. I'm not going to call it a fraud, but there are people that are suggesting that it is. And if we get some research reports out there and people start to, unwind, the layers, I feel like, the truth will come out and things will come in. So next up, MMV, failed follow through momentum section, right? Failed follow through is stocks that I want to go higher and then start to join the trend after they exhaust out any other shorts and then join the trend to the backside. So MMV, higher the better, failed follow through. UCAR, higher the better, failed follow through. So just some quick looks, something like this. I would hope that we'd have some sort of gap and maybe a push to 2 to 230s exhaustion and then fade off. There's a good chance we gap down, but in an ideal world, I'd be looking for any good push into this area and then start to scale in. And next up is UCAR. And again, same kind of situation. I'd love to see it push towards 10s, exhaust out, and fail to follow through. We've got MVIS. This one's been fantastic, but they keep on soaking it up. So every day I've been doing the same sort of thing. Some days it's really nice like this. Other days it just kind of goes down and then consolidates and starts to grind back up. So, I will continue to be there. I would expect that this will hold trend and continue on as long as the market does. However, when the market shifts and we start to pull back, I would like to focus on this one because I do feel like it will pull back. Then I've got UTRS and LVTX as potentials. And this one, it looks like a nice intraday. This is a nice mean reversion type trade as well. Unfortunately, it unwound quite a bit. So, I'd be looking maybe to the 280 level and then potential fade off from there. Man, this thing keeps on maximizing and minimizing. And then WLDS, not as sexy, but I have it on there just in case. I'd probably set some price alerts at 180s just so when everybody else forgets, you remember. So far, it's all liquidity trap-ish, and it could continue to go. So I have on failed follow through, but I'm not bearish. I'm not biased to the short side. I just want to wait for this to confirm. So we'll see. Maybe it goes 250s, 3s, something like that. But if not, I wanted to be alerted when it breaks under that 180 because that's when it's going to unwind. And the last couple, we've got QBTS, which, they had some filings. You guys know I've been here since, basically 68, 69, 70, some ads, some sells along the way. So I'm speaking from a lower average. I'm speaking from somebody that's already taken profits. So, I don't want to hear from somebody that's like, oh, I bought at 160. Do you think it can still break out? That has not been the plan at all. And the idea was literally a double ago. And we've been talking about it for 2 weeks. So for you to be buying on a breakout, that's on you. And that's on, you got to have your own risk. And yes, maybe it could keep on going depending on how they raise or whatever the deal is. Filings are a little confusing, but obviously over 170 starts to base, then I think that it could go absolutely bananas. But for right now, based on the filings on Friday and stuff, I want to be, cautiously optimistic. Let's see. It had a big buyer come in the last 2 days, so I'd love to see it set up and go, especially if more PRs. But if it doesn't, don't force the trade. I've given back so much money trying to force, XELA, for example, trying to force my thesis to play out. I was up huge, and I'm like, all right, I'm on the right side of this thing. I'm going to let it work. And then it's like, it failed there. That's an obvious exhaustion move, failed follow through. But yet I stuck around anyway because I wanted to be right. And I ended up, giving back so much of that trade because it ended up doing what it was supposed to do. It exhausted out, failed follow through, continued to stay heavy. And here I am trying to, make my thesis work. So other than that, NNOX, we already went over. If it has weak open, starts to go for red to green, I'm interested in it every single day until we have some sort of 25, 23, 25, 22, 23, 25 sort of breakout move. But that's it. So as always, like the video, leave a comment, retweet, like the tweet with the scan, and I will pick an Icon Meals winner next week, and I will pick a Scans winner, and I will pick an IU winner, and it should be a good Sunday video next week. So have a good rest of the weekend, and we'll see you in the room.